Thank everyone for joining us. We've got a pretty good list of attendees. Today we'll be joined by our chief examiners, Maureen Belanger from our Life and Health Division and Edwin Pugsley from our Property and Casualty Division. And we'll be talking about market analysis and regulation. Quick housekeeping item. We encourage you to ask questions by typing them into the chat window at any time. And at the end of the presentation, we'll take a few moments to address any questions that might come up. And of course, as always, you can reach us here at the department via email or phone, and we will do everything we can to get our subject matter experts to answer your questions in a timely manner. Before we get started, I'd like to introduce, to kick things off, our Deputy Commissioner, DJ Bettencourt.
Well, thanks so much, Andrew, and good afternoon, and welcome to the New Hampshire Insurance Department's monthly webinar series. As was mentioned, my name is DJ Bettencourt, and I have the pleasure of serving as the Deputy Commissioner of the department. Insurance impacts the public welfare, as we know, in many ways, but one of the most important ways is by providing financial and economic stability to the public. And therefore, state governments have a vested interest in making sure insurance companies remain solvent and treat customers fairly by paying claims when there is a legitimately covered loss. After all, the insurance market can only grow if there is public confidence in the marketplace. Sensible, moderate regulation helps foster this public confidence, which is best secured in a market environment where guardrails help to ensure that products are fairly priced, transparent, and readily available by many competing and reliable companies. At the New Hampshire Insurance Department, we strive to ensure consumers have access to beneficial and compliant insurance products, and are protecting insurers that against insurers, that fail to operate in ways that are legal or fair to consumers. But what does that mean exactly, and what does that look like here in New Hampshire? And so, to give you a little bit more of an understanding and a perspective on that, we're joined today by two of our department's chief market conduct examiners, Maureen Belanger, who handles Health and Life, and Edwin Pugsley, who handles Property and Casualty for the department. And they're going to share with you how they ensure that New Hampshire's insurance market is fair, competitive, and looks out for consumers in a free market system. So I'll hand it over to them.
Great. Thank you very much, DJ. I am Maureen, and I'm really happy to be here today to talk to you about market regulation. It happens to be one of my favorite subjects. So I know if I tend to go off the rails a little bit, somebody will rein me in. But let's start with the definition of what market regulation is. The basic tenet of market regulation is to protect consumers by identifying and correcting insurer operating practices that are in conflict and contrast with contract provisions, state laws, rules, regulations, or orders of the commissioner. And this is a definition that comes from the NEIC. And I think it's a really good definition, but I do think there's a piece of it missing, and DJ just touched upon that. And that is balancing the need for consumer protection with the need to have a healthy market for insurers and other licensees to be able to innovate and to bring choice to consumer. So while our main focus is protecting the consumer, we do have to have that balance with ensuring that the market is healthy. Next slide, please. So there are really two components of market regulation: market analysis and market conduct. I'm going to walk you through market analysis, and then I'm going to turn it over to Wynn, who's going to spend a little time with you on market conduct. So for market analysis and market conduct, the NEIC, which is the National Association of Insurance Commissioners, puts together a really good framework for how we conduct business as market regulators. It includes a market regulation handbook, which is 4 volumes, over 1,200 pages of guidelines and standards that we adhere to as we're conducting analysis and market conduct. There are also a whole bunch of committees that support market regulation work, and I've listed a couple of them here. The Market Regulation and Consumer Affairs D Committee, which has several task forces and working groups beneath it. 2 of the working groups that we pay particular attention to are the Market Analysis Procedures Working Group, which, as the name suggests, deals with market analysis, and the Market Conduct Examination Standards Working Group. And both Wynn and I participate in both of these working groups. Next slide, please. All right, so let's talk a little bit more about market analysis and focus on what it is, why it's important, what data sources we use, how we pull it all together, and what the continuum of actions are. At its core, a good market analysis program is really a system of collection and analysis of data and other information. It's really important because if you go back to our definition of market regulation, our goal is consumer protection and a robust and healthy market. Looking at various sources of data gives us a snapshot as to how our licensees are behaving in the market, and it will help us to identify any potential areas of concern that have the potential to grow into something that could be seriously impactful to consumers. So by looking at the data we have ahead of time, we're hoping to mitigate any lasting harm or significant harm to the consumers in the marketplace and the marketplace in general. So what kind of data do we look at and where does it come from? The NAIC collects a wealth of data, financial and operational. So annually, carriers are required to file a financial annual statement, and they're also required to file market conduct annual statements. And both of those filings contain an enormous amount of information that we use to help us get a better assessment of how the company is doing. Financial from a solvency side, which is what our financial regulation unit does, and then from the operational side, how they're paying their claims, what kind of complaints do they have, et cetera. In New Hampshire, we also have in rule and law a lot of reports that come in, particularly on the health side, that give us a lot of insight into how companies are behaving, what they're certifying that they sell, are they compliant with certain advertising requirements, et cetera. We look at other regulator actions. So what are other states doing? What companies might they be looking at? What examinations have they done recently? What investigations have they done recently? Are they posting bulletins about a particular issue that's a concern in their jurisdiction? And then are those companies that are the subject of those actions operating in New Hampshire? And what is their market share? Do they have a significant presence here? Is that something that we want to spend some time looking at based on their market share and the number of consumers that potentially could be impacted? We would look at media coverage, both positive and negative. If there is a licensee who's receiving a lot of negative coverage, obviously that's of great concern to us, whether it be here locally or nationally. But even if there's a lot of positive, because that means that there are potentially new products being offered, or they're exponentially growing in a particular market. And so we want to keep an eye on those things as well to see how those may impact operations for them overall, again, in particular for our consumers here in New Hampshire. We also get data and information from industry and consumer organizations. From a health perspective, the Kaiser Family Foundation puts out a lot of data every year. CMS also produces a lot of data that we look at. So we want to take into account, lots of various sources of data that can help us form a snapshot of how an entity is doing here and how they're treating their consumers. So let's put it all together. So from an NAIC perspective, they have a three-tier approach to analysis. They have baseline analysis, which is really just setting the benchmark for what does this company look like today, and that will help us determine if they're straying from the norm. So it gives us that level set to start with. A level 1 analysis is the next step, and that we would use if we wanted to dig a little deeper. So we've completed the baseline analysis, and maybe something has popped up in the media that we're not too sure about. We could do a level 1 analysis, which looks deeper into the data that we collect and that the NAIC collects, and give us a little bit of a clearer picture as to what may be happening with this particular company. Finally, the level 2 analysis is a true deep dive into all of the data that's available through the NAIC and all of the data sources that I mentioned earlier. We kind of put all of that together and determine whether or not there's a concern. If we do see a concern, we can do a couple of things as regulators. One, we can notify our partner jurisdictions through an NAIC committee called MOG, which is the Market Actions Working Group, to see if there are other options or other instances where this company might be floundering in another jurisdiction. And we can take a couple of steps through the continuum of actions. And those include everything from picking up the phone and calling the company to clarify some data that may have come in. It could be sending a set of interrogatories, which is a little bit more formal and asks a few more pointed questions. We could request data from the company. We could talk to stakeholders. What are other people seeing? We could look into complaint data, which I should have mentioned is a source that we use quite frequently. But we want to make sure that our regulatory response is appropriate for the issue that the analysis has identified. If it's a fairly minor concern that could probably be answered with a question, we wouldn't want to leap directly into something like an investigation or an examination. We want to make sure that the response matches the concern, if there is a concern. So, and those are just a few of the continuum actions that we have. But what we want to make sure that we're doing is having constant dialogues with our carriers so that they know that we're here to have conversations with them about issues that they may be having and to keep that door open. So it's not something that we are necessarily trying to drop the hammer on them for, but we'd rather have them come to the table and have a meaningful conversation so we can drive some change to make an impact to our consumers and for the health of the market as well. So there are a couple of continuum actions that I briefly mentioned, and that's investigations and examinations. And Wynn's going to talk a little bit more in depth about the investigations and the examinations. So Wynn, I'll turn it over to you.
Thank you, Maureen. You seem to have done the heavy lift here. Here we go. Once all the analysis and market competition reviews have been done, it's determined whether we have an investigation or we go forward with a market conduct examination. Now, statutorily, we have our authority in RSA 400A16 for investigations, which is often used by the enforcement unit, but Maureen's unit and my unit also use investigation procedures because they're a little less formal than market conduct exams, and they tend to go quicker. They are similar to exams, but they tend to focus on one-off regulatory issues, and sometimes maybe a particular producer is got some complaints against it or him or her, and that could lead to an investigation. They're less formal. They don't have all of the reporting that's necessary for a market conduct examination. And there is the upside for the investigated entity is that there is no administrative fee involved in doing an investigation. I have a couple of examples of recent investigations that the department has participated in, and these are sort of high level. According to Maureen and her side, they've done some healthcare sharing ministries, looking into investigating into how they're managing themselves in the market, life insurance replacements, document retention practices, claim handling practices, utilization review procedures, and credentialing. They stay very busy on the LH side with all of these areas. Property casualty, we're sort of quiet over here compared to the health side. What we have done, we have been tasked with looking into auto body shop complaints, particularly with what this comes down to primarily is a disagreement between the insurer and the auto body shop as to fees and rate. And we have been tasked by the legislature to take a look at this and monitor this area. We've also done lender-placed insurance complaints. That was a one-off. The NAIC and MOG has done a major multi-state exam on the lender-placed line of business, and we participated in that also. And then we also have done a investigation of cancellation and non-renewal of insurance contracts and whether it was legal or non-compliant. So those are areas of investigations that we take on. But my main concern at this point is we do examinations, and I've been doing it for a very long time. And this is an area where I think we dig into a company's practices and we can understand what they're doing. So let's move on to this one. Now, examinations are authorized under the RSA 400A 37 chapter. And what this does is it gives the commissioner really broad authority to look at almost every aspect of an insurance company that's licensed in the state. If we get to this point where an exam is called or it is justified based on all the work that Maureen had described at the front end of our compliance business, then we go through a procedure here at the department where we have to put together a justification memo and a whole procedure. And I will get to that in another slide. But they're basically called on because of areas the New Hampshire insurance marketplaces are impacted. And with market analysis, and we get consumer unit complaint data and also enforcement referrals. I wanted to give you an example of a marketplace impact that we recently had. The property and casualty market for personal auto in the state has over 100 companies with written premium reporting. And with the top 5 company groups controlling about 65% of our market, this line is considered pretty competitive. And a lot of the P&C lines are competitive. We handled examinations with 4 P&C examiners and 4 LAH examiners. So you can see that the department has its hands full. And just some numbers, we have 57 domestic insurers in New Hampshire. We license over 1,300 companies. That includes life, health, property, casualty, and a lot of other small lines of business. We have 19,000 plus resident producers in the state, with over 300,000 non-resident producers licensed. And adjusters, we license them too. We're one of the few states that does license adjusters. So all of these elements are part of what a review would entail. We would want to see if the insurance is being sold by a licensed producer, if the claim is being managed by a licensed adjuster. So there's really 2 kinds of exams that the NAIC has delineated. One is a comprehensive exam, which really is a soup to nuts type of examination, and we don't do those at all because we like to focus our exams in a target area where there's consumer harm. Comprehensive exams are very expensive and they're very time consuming, and I'm not sure that there's a lot of benefit in spending all that effort in looking at a top to bottom of a company. The target exams, I think, are much more effective, and we've been doing those for years. A good example of a target exam recently is we were looking into the fact that New Hampshire is one of the few states that doesn't require automobile insurance. So the legislature in their wisdom said, look, if there's people running into you or having an accident with you and they're uninsured, it's really not fair that you are compelled to pay your comprehensive deductible. So one of the things that we did was we went to see if all the companies, who write here are doing this correctly, because it's a quirky little law of New Hampshire. We went and looked at the whole market for compliance in this rule. And throughout 36 different exams, we returned over $500,000 in deductibles, if you will, to New Hampshire consumers. That was a great success. We felt that we were really helping the consumer in that sense. So that's a good example of a target exam. So there are 7 different areas that the NAIC handbook recommends that we can look into as far as business practice areas. And you can see them on the screen there. And we typically don't do, if you were to do a comprehensive, you'd probably want to look at all 7 of these areas. As you can imagine, as the handbook that Maureen mentioned with 1,300 pages, this is pretty extensive. We like to make this less egregious for the companies in the sense that they don't have to put up with us for a year looking at all these different areas. We tend to look at the complaint handling, the marketing and sales, particularly in the health and life side of the house, because we have rules and statutes in place for that. Producer and adjuster licensing, which we always look at for our claims and underwriting reviews. Policyholder service. Underwriting and rating, which my group does quite a bit of. And we're testing to see if companies are writing the business as they have filed based on rates and forms and rating methodologies. And New Hampshire has, again, its own unique set of rules in certain areas about what's available and what isn't available as far as coverages. And then claims, we do a lot of the claims, particularly auto claims. We like to get the biggest bang for the buck, and most of the auto policies in the state are managed by large groups of companies. So that part of our exam is pretty common. Depending on the scope of the examination, examiners typically test several areas for company compliance with statutes and rules. I want to give you an example of some of the stuff we've recently done, areas that both sides of the house have participated in and done exams on. Over on this side, pet insurance is become very popular and is sort of a high growth line of business. And it came into being, well, I don't know, 10 years ago or so, but we're seeing premium growth that's doubling almost every year. So it's become very popular. So we wanted to get in front of this to see exactly what pet insurance policies look like, how they're selling it, how they're handling the claims. And that's one of the more recent jobs we've done. We've done 3 exams on the pet insurance. We are statutorily required to go look at our assigned risk workers' comp servicing carriers every 3 years. We do personal auto claims, and we also have we're just starting to look at consumer guarantee contracts. Those are quasi insurance, but they come under we have a statute that we use to take a look at them. On Maureen's side, she's done, and this is Maureen, if you want to elaborate on mental health parity, declined underwriting, continuing care communities, and the CCRs and the health claims. Been busy over there too for 4. I last wanted to show you a quick rundown on how an exam would sort of progress. So once we determine that an exam needs to be initiated, the examiner, as chief, I assign an examiner in charge who is to handle all elements of the market conduct exam, and they create an exam. There's a justification memo that is reviewed by the commissioner, and there is an exam warrant, which is issued by the commissioner also. The target company is notified and initial data sets are requested. We ask for a lot of data. From the P&C side, we typically look for policies or claims in a 3-year period. Tends to be the last three years. We want to get fairly current representation of how a company is managing itself in the marketplace. And this can be the portion or the part of the front end of these exams where you really have to pay attention, because data can be difficult to make sure you've got the right stuff. And every company handles their data slightly differently. We have standardized data requests. In a lot of ways, those are put out by the NAIC, and they're a wish list because not every company can do it, collect the data as the list asks for. But once we get our data, then we connect with the company and all of their personnel, and we have a discussion as to what the scope of the exam will be, what our methods will be, how we're going to go about examining files. And we look at individual files. And prior to COVID, we used to go on the road a lot. Now all exams are done in-house. The technology's there. Most companies will allow us into their systems to look at claims or underwriting. So we no longer travel. File review, and we do sampling, and it's a random selection of samples. We use random generator for sampling. We typically pull a couple of hundred files and do a soup to nuts review on whatever line of work we're doing. In the case of a claims review, we have over 20 steps we have to check to make sure that the file is in compliance with the particular rule that we have, which talks about a lot of the timelines and when total loss valuations, and a lot of the rules we have say you have to have this notice. If you're declining a claim, you need to put the notification that the insurance department is available if you should so do it. A lot of companies miss that. This is really the meat of an exam, is doing the file review. As far as time, there's a lot of back and forth with the companies. The companies are afforded 10 days to respond to questions. We try to batch them so that can be done in a sort of orderly fashion. And then the examiners sort of tabulate the results of our back and forth and what our review looks like into spreadsheets, and we share that with the companies. And we have sort of ongoing discussions with them. We don't want to have surprises for them at the end. EIC is responsible for writing the examination report, and he submits that to the commissioner, he or she. And there's a whole procedure as far as the report part of it, and that takes up a little bit more time. And I thought to give you a little rundown on how that works. At the end of an exam, within 60 days following the completion of the exam, the EIC files a verified report to the commissioner, and that is sent to the company. That's the company's first look at the report. The company has 30 days to review and respond, make written submissions, offer rebuttals to the report. There's a lot of dialogue back and forth with the insurance company and the examiners at this point. They have 30 days to respond. They can request additional time. The next step is the commissioner signs an order adopting the report. Once we pass the 30 days, the company can request a closed door meeting with the insurance commissioner to discuss elements of the exam if they feel they need to. That's not very common, but they can request that. And then there's the commissioner signs a final order, final order accepting the report, and that's what's kept at the insurance department. These exams can take up to 3 to 4 months, but they're pretty thorough, and we feel that we give the company plenty of opportunity to present their position, and we are constantly in contact with our own attorneys to make sure that we're interpreting rules and laws appropriately. And that pretty much is the market conduct exam element of what we do here at the department. And we really enjoy doing it. I have a big, a seasoned group of people, and that is really what we hope to do is help the consumer out. And we've been trying to get money back as much as we can, but companies are very cooperative. Most companies have professional staff. Examinations are a part of the world that we live in as far as insurance regulators. And with that, I'll throw it back to DJ, I guess, unless Maureen has anything she'd like to add to my presentation. Thank you.
You all good, Maureen?
I'm all good. Thank you, DJ.
Awesome. Well, thank you both very, very much. I think that this has been an excellent discussion about what market regulation in New Hampshire looks like and the tools that are available to us to achieve some of the principles that I talked about earlier in the program. I'm very heartened to see that some legislators have joined us on our webinar today. I sent a special invite to them because I think so many times when we bring bills forward or when we testify on pieces of legislation, we use some of these terms, but I think that this has been a great opportunity for them to appreciate in some detail what we actually mean and what actually takes place when we talk about the types of things that we've talked about today. So I know that we've had a couple of questions come in. I don't know that we'll be able to get to all of them, but I'll kick it over to Andrew to give us one of them.
Okay, fantastic. Well, the first question is, does the department have a statutory mandate to promote competition, and how do we monitor and promote competition?
Sure. Well, I'll start that off, and then obviously Wynn and Maureen can share their thoughts as well. Yes, I believe we do have a statutory obligation to promote a competitive marketplace. The insurance department here in New Hampshire statutorily can be found in New Hampshire RSA 400A. And some of the ways in which we do that are, as Wynn and Maureen talked about, we do competitive market determinations. And I'm proud of New Hampshire's market. I think the proof is there in the pudding, in the sense that we have 1,300 companies approximately operating in New Hampshire that are writing $7 billion worth of premium. We have no hard markets absent medical malpractice, which is not a New Hampshire problem. That's a nationwide problem, that market is a little bit hard. So I think the approach that we've taken and the tools that have been that are at our disposal are helping us to fulfill our statutory obligations to not only ensure a competitive marketplace, but to also protect consumers. And I'll just put a quick plug in for our consumer services division. You know, many times they are kind of the first warning signal that there may be a problem somewhere in the market. We have a group of 7 dedicated individuals who take in about 5,000 consumer calls per year. And as a result of triaging every single one of those complaints, we're able to work with Maureen and Wynn to determine whether or not this is a one-off mistake by a company, or whether the consumer's confused about a certain aspect of their policy, or if there's a trend that's beginning to develop, which may suggest that there is a more systematic problem going on with one of the companies or in the marketplace overall. So we rely heavily on the information that comes in from our consumer division as well. But I'll throw it over to Maureen and Wynn if they have any other thoughts.
No, I think that was great, DJ.
Yep.
Awesome.
Can't add anything.
Awesome. All right, Andrew.
Okay, we have time for another question here. I see a question, some questions that, Bernie, we might better answer offline because they include other subject matter experts. And so let me just make sure that the email address is in the chat box. I'll type that in a second, or perhaps AJ can do that. So let's move to Representative Ammon's question really quick. Deloitte put out a report on use cases for blockchain in insurance, and blockchain refers to crypto. Is the department seeing these use cases growing, and is there technical knowledge within the department to leverage this for regulatory oversight? And Representative Ammon includes a link there.
Well, thank you, Representative Ammon. I will once again offer Maureen and Wynn the opportunity to share their thoughts. From my perspective, I haven't seen anything come through our consumer division to date that would suggest that we've got any sort of a problem here in New Hampshire. I can certainly connect you to our financial regulation division. Those are our subject matter experts for this topic, but I would suspect if there were any considerable concerns on their part, that they'd have worked their way up the chain to me by now. And because they haven't, I assume that things are going fairly well here. Obviously, we'll continue to monitor that as this becomes more prominent.
Okay, we have another question. Let's see here. This will probably be something that we'll need to respond via email because it includes some information from our Consumer Services Department, and we don't have a representative from there here, but maybe we can just see what we can do. According to a department press release, and I think this was at the end of the year, we returned $2.3 million to wronged consumers. And Bernie asks, how is that amount calculated and what qualifies as a return?
Sure. Well, how we calculate it, and again, Maureen and Wynn, how we calculate it is we take a look at what the claim, what the claim should have been paid out at, what it was not being paid out at until our department got involved. And then we capture that recovery based off of what the claim is and what it should have been paid out at. That
Okay.
concise enough, Maureen and Wynn?
Yeah.
And I'm proud of the fact that we create a little bit of a competition between our P&C division and our Life and Health division to see who can recover more for the consumer each year. And they're neck and neck, and they trade the first place prize on a year-to-year basis. So they're working hard and doing a good job.
And then as a follow-up to that, Bernie asks, with regard to the same press release, the department levied fines of $371,000 in 2022. Are those fines sufficient to deter bad practice by insurers, given the amount of $2.3 million returned to wrong consumers? And I think I can take a stab at answering part of this myself because I'm familiar from writing the press release on this. I think that a significant amount of that 2.3 million, DJ, correct me if I'm wrong, that was from one particular situation. Is that correct?
Yep, that is correct. That was one company that really had some issues that had to be worked through, and we dealt with it.
So it was more of an outlier. That particular situation was more of an outlier than indicative of something we see, every fiscal year.
Yeah, that's right, Andrew. And let me say first and foremost that I'm really proud of the fact that New Hampshire has a lot of great companies doing business here. And we do not have the types of systematic bad actors operating here that you may see in other states. We've fostered a very collaborative relationship with our regulated entities. And so when we see little problems, we get right on them and we work with the company to fix them so that they don't turn into big problems. But when we do level fines, it is obviously one of the hopes that in doing so, you will deter that bad behavior. But I can tell you, based off of the, and hopefully it'll be somewhat obvious to you as well, based off of the presentation today, fines are only the second worst thing that can happen to an insurance company. The worst thing that can happen to an insurance company is to be put through one of our market conduct exams. Because as you've heard, we come into the company, we get into their systems, review all of their files, we bill the companies for the market conduct exam, and then at the end of that exam, we see where the areas are that they've gone wrong, and then we issue fines based off of those delinquencies. And so that truly is the worst thing that can happen to a company. And because they know that, they work very hard to make sure that they are doing right by the consumer, and that when we call them and have issues with things, they jump on them right away, and they are very responsive to us so that, as I said, small problems don't turn into big problems.
I don't see any other questions. I think that AJ has put the email address into the chat window. It's communications@ins.nh.gov. We invite anyone that has questions or has a comment or concern to reach out to us, and we'll receive those and make sure they're directed to the proper subject matter expert. I appreciate everyone joining us this afternoon. This will be available to review on our YouTube page in the coming days, so stay tuned there and be sure to share it with your colleagues if they weren't able to join as well. Any final thoughts before we close the meeting?
Nope, just thanks once again to Maureen and Wynn, and we look forward to seeing everybody next month for our webinar series.
We appreciate everyone, and again, feel free to contact us at any time if we can be of assistance to you. Thanks very much.